Hello, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. So, today's webinar is going to be a very good one. We just want to look at gold and silver. We want to see exactly what we expect to be happening on the two. So, we'll start off with gold. This is the chart for gold. It's already I have it on my screen. I have to do some explanations here before at least we go deep into it. And the first thing I'd like to say is that gold somehow is upwards. Therefore, if you're interested in trading it, you're supposed to be looking for buy position. So that was silver. This is gold. So this is how gold has been. If you look at it properly, this is how it has been there since the year 2000. Let's see exactly what we expect to be happening. I'm going to add an indicator first of all. I'm going to add the first indicator. I'm going to add this the 21 simple period moving average. That's the 21. And then I'm going to add also, I'm going to add 52 simple moving average applied to the close price, and then that should appear somewhere in between. And then I'm going to add another one, the last one, which is 100 simple, and then that's a method should be simple. So I'll add that also, and that should be now a bit big. So this is how all of them look on my screen. If you look at this chart from this point here, you can see that the price has maintained an upward trend. From the year 2001, the price was upwards all the way up, up, down, then up, down, up, down, up, down, until the moment when the price actually hit this resistance. So after the move which we saw massive to the upper side, we can see that the price technically hit a resistance at this point. It hit a very good resistance, and then the price pulled back down, up, then down, and went below this moving average. So far, the price is still below that moving average. Like it went down, remained below, it came back up, and then down, and then as we're speaking now, you can see that the price is actually above the three moving averages. So this is one of the reasons I'm saying this is upwards, because after the cross which we had here, the price remained on top. It continued up, up, and as we're speaking now, we are above the highest high we've seen so far, 1829.97. So as long as we continue to see persistence above this level, 1829.97, we do expect a continuation even higher. So on this chart, keep looking for buy positions, keep looking for buy orders, especially on the monthly chart. We do have a resistance here. I'm going to add one more indicator. I'm going to add the zigzag indicator. This is the zigzag indicator. So look at how good it looks, like how well it looks. You can see there's this big move. There's a retracement, a correction, there's a big move up, there's a correction, there's a big move up, there's a correction. And as we're speaking now, the price is in an impulsive wave. So this is upwards. And if the price is to pull back down, that is if the price is to come down, then we have to use the fib levels to trace exactly where the price may come back up to. We take this low, we are going to take this as the swing low here, and then we take this as the swing high, which means we do expect price to pull back up to around 23.6% fib level, or it may retrace even lower up to this level, 1724.54, or it may continue down up to around 19.12. So these are the places to buy from. You either buy from this point, or you wait and buy from this point. The lowest the price may pull back up to is actually 19.12, which is here. So I hope that makes sense. That's what we expect to be happening on this symbol. That is precisely what we do expect to be happening. We want price to pull back up to that point. So as it is now, expect price to move from where the price is now to move up to this point, where it may continue down up to this point. Then the next place where the price may pull back up to is this level here. So that's according to the monthly chart. If you check the weekly chart, this is the swing low here, and then you also have this. So if you're now looking at the weekly chart, you can see that still the moving averages are below price, and also here we use this as swing high, then this remains, this as the swing low, then this remains as the swing high. So as it is now, you can see basically that we are bouncing off from the 23.6% fib level. The price is bouncing off from that point. So wait for a buy. If the price comes up to this point, pick a buy position. Expect that buy to push us up to this level. $20.74.30. So this will be the correct place where you want to, like, if the price comes up to this point, then this will be the correct place where we want to look for a sell from. And if the price breaks above this level, then that will mean we are now continuing to the upper side. So I hope that makes some sense. I hope that makes some sense. That if the price continues to retrace back down, then you look for a buy from this point. The next best place is this point, and the next best place is this point, and then the last best place where you're supposed to buy from is actually at this high. So that's what I think on this symbol. That is my view. That is my view on gold. Let's check the daily chart to see if there's anything of interest. Okay, if you check the daily chart, we still have this as the swing low. I'll shift it. Daily chart is also upward, so consider the price is somehow being held above the 3 moving averages. So if the price is to pull back down, which already has done, the price has pulled back down, it attempted to go below the level 50, but again pulled back up. So this may be a sign that we may see price continue up to maybe this resistance here. The lowest we expect price to retrace back up to is 61.8% fib level. If it goes any lower than this, then that may mean we are now reversing to the last circle of the daily. So let's see what we have on our next symbol, which is silver. As usual, we start from the monthly. So silver is also upwards. As we're speaking now, you can see that silver is upwards. I'm saying it's upward because the 100 moving average is below price. The 52 moving average is also below price, and the 21 is also below where the price is. So I'm going to use fib levels. We have this is the fib level. We take this here as the swing low, and then we take this as the swing high. So if the price pulls back down up to this point, then this will be a good place to look for a buy from. If it continues down up to this level, then this still will be a good place to look for a buy from. If it pulls lower up to this point, 50.0% fib level, then this too will be a good place to look for a buy from. If it breaks lower than this, then that may mean we are now heading to the lower side. So I don't recommend a buy after that. So I hope we're on the same page. We're looking at the same chart. We have the same view on the same chart. We expect buyers to come in on this chart, especially as long as we do have price, as long as the price is not pulled back up to either this level, this level, this level, or this level here. So on the weekly chart, we still have just the same thing. We take this as the swing low here, and then we take this here as the swing high. So we do have this level here where the price may pull back up to. We also have that 8.2% fib level where the price may pull back up to. We also have 50.0% fib level where the price may pull back up to, or 61.8% fib level where the price may likely pull back up to. So these are the places we want to buy from. If the price comes to any of these levels, then we are going to be looking for a trade. The next chart, the same chart on a lesser time frame, we now shift the swing low here. We have this as the swing low, we have this as the swing high. So this is a good place to buy from. Of course, you can see stagnation around that level. We also have this as a good place to look for a buy from. We also have this level as a good place to look for a buy from. We also have this level here as a good place to look for a buy from. So thank you very much. I hope that should be it for the day. I will meet again next Wednesday at the same time. So thank you. See you.